everyone, a very good afternoon. You're watching the newsroom on ET now. I'm Ubina Kapasi. Let's just look at excuse me, what the markets are up to, and we have an uptick being witnessed, but I think it's all about stock-specific news right now. Okay, by the way, just as we speak, in the last couple of minutes, there's been a sharp slide in the equity markets. We were at the 12,000 mark, but suddenly, just in this last, 20-odd minutes, a very sharp slide being witnessed. The equity markets are, in fact, at the day's low with losses of about 0.4%. Let's run you through then the big movers and shakers of today in trade. First up, let's tell you what exactly Bajaj Finance did. We just addressed the numbers over there. NI has come in line with expectations, but the profit after tax is a tad bit below. The provisions have increased from the previous quarter and from the corresponding quarter to 1,700 crore rupees. That's where it stood at. AUM growth was 1%. The gross NPA was 1.03%. The amount in terms of new loans booked was a bit lower. It came in at about 3.62 million versus 6.47 million. So, that's a bit lower. And let's also then take a look at if there's anything on the net NPA front. Yeah, that's 0.37%. Furthermore, in terms of commentary, the company has reversed capitalized interest of 142 crore rupees, and the total amount reversed in the first half is now 361 crore rupees. So that's Bajaj Finance for you. Moving on to more stocks in news then, and take a look at Hindustan Zinc, managing to stay put in trade after declaring that bumper 21.3 rupees per share dividend, the highest interim dividend, interim dividend declared in more than 10 years. The numbers as well were pretty strong, so that's adding to the boost. Britannia Industries, meantime, continues to go lower in trade. We had seen a big fall of 6% combined yesterday's trading session, and today that losing momentum seems to be continuing. Remember that the numbers may have left many on the street wanting for more. So that's Britannia for you. But then on the flip side, and from the two mid-cap names, take a look at Tejas Networks. This has been continuously buzzing. Remember, Vijay Kedia had hiked his stake to over 4% in this quarter from 1% in the previous quarter. So that may have been, sort of a boost for Tejas Networks. A lot of momentum being witnessed over here. And then finally, our earnings mark of today has got to be L&T Info. Great momentum being witnessed in the counter. Volumes as well are, more than double the 20-day average. This on the back of the Q1 numbers. All right, well, let's move on then and talk about the other news. More results as well that are expected today among the nifty names. It's Ultratech Cement that's expected to come out with its Q2 numbers. Vivek Iyer joins us now. And Vivek, after ACC, what can we expect from Ultratech Cement?
After the stellar performance of ACC, all eyes and all focus now shifts to Ultratech Cement. Remember, it's the sector leader, it's the largest cement maker in the country, and what the management of Ultratech says in terms of cement demand, cement pricing, cement outlook is something that a lot of the other smaller cement companies, as well as the entire sector, as well as the entire housing sector, would be looking forward to quite closely. Looking at the consolidated results, revenues are seen lower by almost 4.5% on a year-on-year basis. Profitability is seen much higher by almost 56%. EBITDA is seen up almost 7.5%, and margins are seen expanding almost 200 to 220 basis points. Now, what are the key factors to keep an eye out for? Number one, sequential recovery expected post-lockdown, just as in the case of ACC. It's going to be a combination of pent-up demand due to monsoon as well as lockdown, and also certain amount of green shoots that a lot of management have been alluding to. Realizations are expected to decline marginally on a sequential basis due to this being a seasonally weak quarter. However, we understand that in the month of October, a lot of cement companies have undertaken price hikes. Analysts are estimating volume growth of almost 2 to 4% on a year-on-year basis. However, on a sequential basis, analysts are penciling in a much stronger volume growth of almost 30 to 35%. Cost trends expected to be big. So remember, input costs have been going higher. Diesel as well as Petcoke prices are on an upswing. ACC saw the benefit of the MSA agreement with Ambuja. It'll be interesting to see how exactly Ultratech, what are the cost savings that Ultratech does in order to ensure that margins are not impacted adversely.
All right. Thanks, Vivek, for that. Vinny, over to you then. Today, Colgate will be coming out with its numbers. What can we expect?
Colgate is set to post its Q2 FY21 numbers, and this time after 2 consecutive quarters of decline in volume growth, we are expecting a positive volume growth of around 3%. So finally a volume growth of 3%. Now in terms of overall the sales of the company, we are expecting an increase by 4%, and the sales are expected to be at around 1,265 crores, while profits are also expected to decline this time actually by 1.7%, and this is obviously mainly on account of the tax reversals that was there in the base quarter. So that is why we expect the profits of the company to decline. While in terms of margins, we are expecting an expansion of around 200 basis points, and the margin will stand at 28.4%. Now obviously this is mainly led by the cost optimization as well as the lower ad spends by the company. Now overall the toothbrush segment is expected to continue to be under pressure because it still comes under the discretionary nature, and Colgate was showing a very different trend compared to other companies where rural was growing while urban was not growing as much as rural. But for Colgate, the rural slowdown is still a concern for the company, and that was a very surprising fact compared to other FMCG companies. We will be also watching out in terms of commentary from the management in terms of demand as well as any ad and promotion spend intensity on the toothpaste segment as well as the market share movement of Colgate. So that's all we're going to watch out for from the earnings.
Okay, well, thank you, Vinny, for that. We'll be watching out for both of these numbers. On that note, we'll take a very short break right around the show with the news. And the markets have slipped. We're down by about 0.3%. Okay, welcome back. You're watching the newsroom on ET Now. Let's come to an important story. Flying out of Mumbai is likely to get costlier as the Mumbai International Airport proposes to levy an ad hoc user development fee. The airport wants every domestic and even outbound passenger to pay a levy of 200 and 500 rupees respectively. Utkarsh Chaturvedi joins in with more details. Utkarsh, what's the rationale behind this levy?
So flying in and out of Mumbai can be more expensive given the fact that Mumbai International Airport Limited is proposing an ad hoc UDF. UDF is user development fees for all the incoming and outgoing passengers. Now how much UDF are they talking about? Now for an incoming passenger at this point of time, rupee 176 UDF is being charged. MIAL on the other hand is asking for an additional 500 UDF, which will make it 676. Speaking about the outgoing passengers, at this point of time there is no UDF on outgoing passengers, but what MIAL is looking at is an additional 200 rupee UDF on an outgoing passenger as well. That is 200 rupees per ticket. So while you're coming, you can be paying 500 more. While you're going, you can be paying 200 more. Now this because MIAL believes that given the fact that there was disruption in the market, there were lesser flights, revenues have been hit very hard, and to really continue operations they need to recover some of the money lost, and for that purpose they are looking and they are asking the Airport Economic Regulatory Authority for an additional ad hoc UDF from January 2021. Now obviously it's all in the hands of ERA if they really allow it or not, but if they do, then coming in, flying in Mumbai and flying outside Mumbai, from Mumbai will be a bit more expensive task than it is at this point of time.
Okay, Utkarsh, thank you so much for that. Moving on, Times Network Special Investor Education Initiative Nivesh Ke Funde will seek to guide investors on better managing their financial portfolios and also providing them with simple explanations on how some financial products work. So on this edition, we are going to be taking a look at ETFs or exchange traded funds. Take a look.
Avenue, which has been gaining popularity over the last couple of years, has been exchange traded fund or ETF.
That's true. Now, ETFs are funds that invest in a debt or equity index or commodities like gold.
Yeah, their expense ratio is low since they are passive investments, so they're available at a low cost to investors.
For example, an ETF that's based on a market index will invest in stocks of the companies in the same ratio as they're represented in the index.
So the performance of that ETF will rise and fall almost identically to the performance of that index.
To invest in ETFs, an investor will have to have a demat account as they are bought and sold through the exchanges.
And this very aspect makes ETFs highly liquid since they can be bought and sold like regular stocks at any given point of the day.
So do consider adding ETFs to your portfolio. That's all from us on this edition of Nivesh Ke Funde.
Well, moving on, it's online sales season. A lot of websites have opened the doors to mega discounts, deals, schemes, but it can be very, very overwhelming. It can be confusing as well for online shoppers navigating all of these discounts in these online malls. So here's a guide on how to avoid some rookie mistakes that you can possibly make while shopping online and how to better prepare yourself to make the most of all the deals.
E-commerce websites are opening the doors to discounts and deals as mouth-watering as Diwali's mithais. But a rookie online shopper may lose their way amidst the cacophony of offers and schemes and end up with a cart that's overspilling or a wallet that's wanting. Here are simple mistakes to avoid and ways to navigate the online malls. Amidst all of the uncertainty we're in the midst of due to the pandemic, making a budget has assumed prime importance when you log on to shop. You may also give yourself a budget for items that are not on your shopping list but may catch your eye during the sale. Not making a shopping list when sitting down to surf is almost like letting a kid loose in the candy store, especially if you are prone to spontaneous shopping. A better idea would be to add items to your wish list even before the sale. Last two pieces available. This line is for sure to make those with FOMO sweat and press the buy button. It's no surprise that this is one of the most persuasive techniques used by sellers. Well, shoppers snap out of it and seriously consider the cost-benefit analysis of buying the product. It may be tempting to assume that the price during the sale is very attractive, but it may not be the case. Ensure that you scourge other websites or even offline stores for prices before zeroing in, be it after-sale services or warranty. Ensure you're getting the most of the buck and beware of any additional costs you may have to pay.
So now that we have your back, go online and shop your heart out.
Right. Well, on that note, we'll wrap it up on the show. Many thanks for watching.